Well, good morning to this Japan Macro Salon, a regular quarterly conversation between me and Jesper Koll with a special invited guest, organized by the Japan Society in the UK in coordination with the Asia Society in Tokyo, and I gather Asia societies worldwide, which is a wonderful thing. Jesper Koll, as you will all be familiar by now to know, is one of Japan's longest resident and most expert economists and investment strategists, having started in the 1980s, first of all working with the Diet member, but then with S.G. Warburg, later through J.P. Morgan and others, and is now the Japan optimist, but he is also an expert director of Monex Group and a director of many other things and member of a lot of government advisory committees. Our special guest, who we will bring on in 15 minutes' time, is Oki Matsumoto, who is the chairman and founder of the Monex Group, Japan's big online securities firm. We used to call it a startup, but that was 20 years ago when it started up, and it's now an incredibly well-established company. Now, I'm Bill Emmott. I'm chairman of the Japan Society, but also someone always addicted to following what's going on in the Japanese economy and Japanese markets. And it would seem to me, Jesper, that since we last spoke 3 months ago, we've had, as it were, good news from the Bank of Japan's point of view on inflation, but disappointing news on wages. In other words, consumption and the wage cycle hasn't happened in the way that we might have hoped. What do you think is going on there?
Look, you've got the reality of inflation by far outpacing wage gains. And as a result of those, real incomes, are under downward pressure. The other thing, Bill, that is actually surprisingly stubborn in its negativity, dare I say, is Japanese exports. You find that, the export volumes are very, very stubborn, not really increasing. As a result of that, of course, the trade balance for goods, remains under pressure. And when you dissect a little bit into the data, it is actually predominantly exports to China that are very, very weak. And here in the latest earnings results season, you actually saw that the orders from China, from Japan's leading machinery companies, right, were actually down 40–50%, which is, so it's a little bit worrying. Japan had always been a good canary in the coal mine, so to speak, being a leading indicator, making the components, making the machines that then are finalized in the People's Republic of China. And unfortunately here, the news is not very good. So consumption weak, exports weak. The bright spot, Bill, business investment expenditure. And, you really, there's obviously the data goes up and down, but for all intents and purposes, whether it is small and medium-sized companies, whether it is the large industrial companies, whether it is non-manufacturing companies, you do find that investment in more productive, in better materials is actually happening. So there's a significant amount of capital deepening going on. And then the good news for 2023 is the reality that onshoring is actually starting to gain some traction. And you see it not just in the semiconductor area, but specifically there.
Well, that's very interesting. I mean, I'm not surprised by the fall in exports to China, or the weakness of exports to China. I mean, clearly we're all conscious of the weakness of the Chinese economy, the sense of the property collapse, the debt overhang that they're suffering. But I suppose we could say that the Japanification of China, as it becomes the new slogan, is now also Japanifying Japan, in the sense of weakening Japan. But if these businesses are investing and deepening capital, they must be investing for markets that they're expecting somewhere. And that presumably is markets either in China because they think there's going to be a revival, or perhaps if they're export businesses, they're expecting growing markets elsewhere in Southeast Asia. perhaps in North America, perhaps in Europe. What do you think? What is it that's stimulating that capital deepening beyond the onshoring, which perhaps we'll come back to in a second?
Yeah, the capital deepening, is forced by a variety of local factors. And number one, look, the reality of the labor shortage, is just very blatant. Number two, you do actually have pressure from domestic investors on corporate CEOs. What are you doing for the future of your business? What are you investing in? What is your growth strategy? Which again, for a lot of the companies, they now take a look at what, for example, Hitachi Corporation did, in terms of, not just restructuring its business and its balance sheet, but also reinvesting, in new businesses. So that's something that is going on here. And then last but not least, the reality of inflation. Do you have price power? Do you not have price power? And, if you don't manufacture, and don't provide services with the latest technology, people are not gonna use you anymore. So it's quite interesting that you actually see what was sort of an obstacle in the past, right? In the sense of that, well, when everybody is suffering deflation, it doesn't really matter so much, right, who is the good one. But now that there is very visible inflation pressures in Japan, actually having the latest machinery, having the latest tools available, and that goes for very basic things like the convenience store, right? Mm-hmm. Where, now you do find that automated tellers and the use of electronic money, which even 3 or 4 years ago was sort of kind of poo-pooed as sort of like, my God, why do we need to have these Chinese practices? Now everybody is embracing it and is digitalizing actually fast.
Well, that is very interesting. I mean, I'm tempted to ask you about the yen and how this impacts it, but that's perhaps an old-fashioned way of looking at things, looking at Japan as somehow affected always by the export market. As you say, this domestic-oriented investment is what's very important to remember, to focus on. But the export market still exists. But
No, the export market still exists. Nobody doubts that, Asia Pacific, and be my guest, whether you call them the ASEAN countries or the Indo-Pacific nations, I mean, nobody doubts that these are going to be the engines of growth. That's where the new middle class is going to be increasing. There's no harm on that. Let me tell you one anecdote. The good people at Shiseido, the cosmetics company, they have closed all their Chinese factories, not because they don't like the regime in China, but because they've discovered that if they make cosmetics in Japan and they can put the label "Made in Japan" on the facial cream, they can actually charge a 30 to 35% premium over the one that says "Made in China" or "Made in Hong Kong" or "Made in wherever." So it's quite interesting, and this is, of course, partly helped by the fact that, actually building a factory in Japan is now relatively affordable, relatively cheap. But on top of that, this sort of brand value of Japan, certainly at the luxury end, right, is actually coming through. There's a couple of believe it or not, there's a couple of American whiskey distilleries who have bought land and are building distilleries in Hokkaido. Because they've figured out that, again, if you can distill a whiskey in Hokkaido and say "Made in Hokkaido" or "Made in Japan," again, this thing sells a 40% premium over "Made in Kentucky."
Wow, that's fantastic. Nobody would ever have predicted that might happen, but that's fantastic. Now, of course, this goes nicely against the Chinese effort to denigrate Japanese goods, specifically seafood. I mean, the Fukushima water issue and all of that. And that's a nice moment to mention that I saw on the former Twitter, X, a photograph of Jeremy Hunt, British Chancellor of the Exchequer, at the Japan Matsuri, jointly organized by the Japan Society and other Japanese associations of Britain yesterday in Trafalgar Square, eating Japanese seafood, of course, and saying that it was oishi. And nice to have that political gesture aligned. We, by the way, had 40,000 people there at the Japan Matsumoto. It was a huge success, I would say, and a testament to Japan's enduring brand value in the UK as well.
Which is Bill, gets you to another point in terms of like a very tangible driver, of positive growth. Is, I mean, if you look at the data, inbound tourism is now basically back to about 90% levels of where it was, before the pandemic, struck us all down. And as you know, the People's Republic of China actually did open its gates for its own people, and so we are right now actually in the Chinese equivalent of Golden Week, and when I walk around in Omotesando, all I hear is Chinese, and it's getting difficult to pretend that they're all from Taiwan. So inbound tourism definitely is on a tear again.
And is that reaching a higher value now? I mean, the question has often been whether it's a low-value tourism from China or whether Japan can be a premium tourist destination. How is that evolving in your estimation?
It is. I cannot judge from the Chinese, but certainly a couple of my friends are doing sort of luxury guided tours, and they are chock-a-block. So sort of a luxury tour. A room at the Aman or at the at the Hotel Okura now, you very, very quickly pay upwards of 80,000 yen. Yes. Which before the pandemic would have been, around 35, 40,000 yen, right? So it's
yeah, no. That's a sudden market shift, which is very, very meaningful. Now we'll bring on Oki Matsumoto in a moment. Let me ask you for the background a little bit on the stock market. I mean, maybe from an economic point of view, you've got this good mood among investors, capital deepening. I mean, among business investors. There's also a good mood among foreign investors, although I note even a piece in today's Financial Times by Goldman Sachs partner, perhaps one of Matsumoto-san's former colleagues, again, talking up the notion that this time is different. How does it feel to you in market terms? And then we'll talk about corporate governance with Oki.
Look, I think, we must not forget that the overarching macro conditions, Japan is a global standout in the sense that I've got hugely, negative real interest rates. And, Governor Ueda, the new man at the Bank of Japan, keeps on going out of his way to explain that we're not certain that the inflation target of 2% has been achieved. So for all intents and purposes, the reality of monetary easing continuing, of, the sort of wonderful standout, my God, real interest rates being as negative as they've never been before in Japan's economic history. And then, on top of that, of course, we've got Prime Minister Kishida, who is, very keen to give us yet another supplementary budget. So in other words, the fiscal spigot, fiscal support, is also going pedal to the metal. So, the reality is that actually as a macro trade, right, the fact that Japan is this global standout with both monetary and fiscal policy being decisively pro-growth, that just makes it an asymmetric bet from a macroeconomic perspective. And then, of course, on top of that, all the analysts and all the stock pickers, they come to Tokyo and they walk away with a big smile on their face because corporate governance is not just being talked about, you're seeing it, whether it's dividend increases, whether it is share buybacks, whether it's the Tokyo Stock Exchange, promoting this, price to book greater than 1, the changes are tangible, they are real.
No, I think that's a very powerful point. Now, let me ask Matsumoto-san to turn on your video and join this conversation. There we are. Welcome to the Japan Society, Oki Matsumoto. A delight to see you. As I said at the start, Matsumoto-san was formerly at Goldman Sachs, I think the youngest person getting to partner, and then founded his own company, Monex, together with Sony initially, and that's in 1999, 2004, became the Monex Group, and the rest is recent financial history, and congratulations on that. But you're also very much involved in, if I may highlight, in two ways. One is on this Tokyo Stock Exchange, or JPX, advisory committee. Second, if I understand it, the Japan Catalyst Fund that you operate, which is like what you might describe as a long-term activist investor.
Yes.
By my reading of it. And before asking you to speak, let me say to the audience who are here, please submit any questions that you have of any of us, but especially now of Oki Matsumoto, through the Q&A function at any time, and I'll bring them into the discussion as and when we can. And of course, questions of Jesper and me about the economy, which we'll come back to later. But please put your questions in. Now, Oki, all this corporate governance stuff, does it really have an impact? A lot of us journalists find it boring to write about because we don't really quite understand it, probably.
But I think it's really, finally, it's changing. I have been in this business for like 37 years. Since 1987, I've been in the capital markets, and I've been on the board of many advisory committee of the government. I used to be the board member of Tokyo Stock Exchange as well. And many times, people said, we are now changing, right? And then, and also, non-Japanese came to Japan and said, maybe this time Japan is changing. But, it was never been the case. But this time, I have to say, this is really something is changing. So that is, I'm not just making it up. This is a real secular change finally happening in Japan, which is very interesting.
And what are the indicators of that change, do you think? I mean, as you say, there have been reforms before, perfectly good reforms even, and then attention then gets diverted by something going on at Toshiba, or some scandal at Mitsubishi Motors, or something else, and you think, well, what was it all there for? What difference does it really make? Why do you think these ones make a difference?
Just pick one fact that the TSE, as you know, recently told all listed companies, if your price to book is below 1, you have to come up with the improving plans that disclose it, which is the TSE. If you look back the history after World War II, the TSE was basically made by companies, made by the listed companies. So listed companies had been always thinking, well, TSE is our kind of platform we made, and the TSE is being always kind of very sensitive to saying something strong against issuers. But now they are totally different. That is really the first time ever we see this kind of change in Japan. Of course, reacting to this TSE's request, many companies came up with the improvement plan, and then did lots of buybacks and blah blah blah. So that is also very interesting. But I think the most interesting thing is that the TSE itself changed this time, which I think is actually, it's kind of indication of what is happening in Japan. It's not only issuers, it's TSE is changing. And the reason why TSE is changing is the same reason for many issuers are now changing.
Do you feel that there's a new generation taking hold there? Should we think of these as not being from the Showa generation? Well, you were working during the Showa generation, so you were, you must.
Well,
but nevertheless, is this a generational thing, or is it a kind of mentality thing that comes from particular business exposure?
It's the Japan, after become the completely devastated place in the World War II, it took Japan only 23 years to become the world #2 economy. Okay, only 23 years. So it was a huge success. And then I started working in 1987. As you know, the Nikkei marked a peak in 1989. But as regards society or the economy, in 1987 already, Japan was beyond the peak. And then since I started working, it always kind of drifted down. So myself and my generation always seeing Japan did worse compared to last year, that stuff. Okay. Compared to that, our seniors, they had a huge success experience for sure. So when the world, the framework changed, and then people started telling Japan, you have to change, you gotta change. But my seniors with huge success experience from Showa, they went like, no, we did so great. Why we have to change? Okay, yeah. We can just stick to our way of doing. But my generation, from the day I started working, I didn't see the success of Japan, so that we are naturally more open-minded to the global best practices or global standard, those kind of things. And what happened is that those senior, our generation have been always thinking we should change. We should take more global best practices or global way of doing businesses, including all corporate governance and everything. We wanted to change it, but we had the seniors kind of hanging around above us. But they are now gone. Especially interesting thing is that up until just 2-3 years ago, although even if they become even if they step down from CEO, they were still kind of come to the office every day as a senior advisor, the same floor as the executive, management people. And then so they had a lots of experience to the current management. But because of the COVID pandemic, they are gone. They're not coming to the office anymore. So my generation really taking over not only private sectors, but also bureaucracy, medias, TSE, all over the place. So generation is changed. So that is really the biggest difference of Japan compared to like 3 or 5 years ago.
Maybe it's only in politics then that the 75 and 80-year-olds are still pulling the strings.
Well, but even in the politics area, if you look at Kishida's Kishida's team carefully, his secretaries are like 65 years old ex-bureaucrat, ex-head of METI or ex-head of one branch of the government. So they don't have to go back to the those government branches, but they know exactly how to execute things. They know exactly which button to push. So those guys are doing a secretary for Kishida. And meanwhile, policy making team of Kishida are politicians in 40s.
Yes.
40 years old. Okay. So up until the Suga or Abe or those former cabinet, former prime ministers, secretaries were like 40 years old young bureaucrats, and policy-making team were 75 years politicians. So it's totally changed.
Oh, that's
right?
interesting.
So it's quite So the thing is that Kishida may not be charismatic, and this that kind of system I just explained may not be visible. And as I said, generation overall changing in the private sector and every places that it are not so visible. It's not led by superstars, right? It's led by just people. So you don't see that very vividly, but it's very, very strong, unchangeable secular change happening in Japan.
No, that's fascinating. Now, we've got a couple of questions in, but one of them in particular, I think you've begun to answer it. I mean, Jessica Kine asks, really, is this a false dawn? She was reading this, I think, in the FT this morning, this Goldman Sachs person writing an opinion piece saying that, pointing out that a dollar invested in December 1989 in the topics would now only be worth 80 cents. She asks, how really can Japan become a more serious investment destination and not make this a false dawn? Now, I think that the generation change is part of what you've said, must be part of that. Perhaps another question is something that Jesper's prompted me quite rightly about, the balance between domestic and international investors. International investors, of course, can be waves in and out, particularly dependent on the trade, on their view of the yen. But the fundamental questions have to be about the bulk of investors, which is domestic, institutional and retail. I wonder what each of you think about that. How are they responding to these new Tokyo Stock Exchange requirements, to the price to book issue, to all of that? Are they really backing it? Have they changed? Has Nippon Life changed and all the others?
Well, it's I think it's domestic investors are changing. And as you know, that the GPIF, the biggest institutional investors in Japan, their exposure to equity is way much larger than before. They are now investing into Japanese equity market. Yeah. Very how do you say? It's very good. And as you know, I believe Japan is introducing the new NISA. It's a Nippon, I forgot, it's a Japanese version of ISA.
Yes.
Introduced in the UK. And the new NISA, the capacity is actually bigger than Japanese nationwide people's personal financial asset. So, it's crazily big capacity. Kishida cabinet is now introducing this kind of a tax, advantaged, stimulus package for people to move money from deposit into, investment. The government is providing the crazily huge kind of capacity. I mean, original NISA was too small to see. Even, government spent a lot of kind of efforts, propaganding the NISA. It was too small. But this time, it was way kind of too large, huge. Okay, and then you know that Japan has been the biggest creditor
yes.
for years, decades, right? And meanwhile, the foreigners, non-Japanese, being buying Japanese equity, not buying Japanese government bond. So it's kind of vice versa. So Japan's been providing very cheap money as a fixed income to the world, and then the world coming back to Japan to buy equity, right? So it's kind of Japan giving up upside, and then to the foreigners to take the upside, right? It's kind of ridiculous to me, but I think now we are finally trying to change it.
What do you think, Jesper, about this shift?
Look, I think that number one, as Oki pointed out, I mean, when you actually look at the numbers about this new NISA, which is effective from April 1st next year, right? And the average household financial assets, are around between 11-12 million yen. Now you can have 19 million yen tax free. So it's like
it's effective January 1.
But so it is actually, sort of it is really like bringing a hammer to a fist fight. In the sense of the tax incentive. I mean, you cannot excuse, the tax incentive or the lack thereof, anymore. I personally think that, what you do need to see, of course, is wage and income growth. Because if you do have food prices and energy prices and all your basic goods prices and services prices increasing faster than your income gains, I mean, anybody anywhere in the world will become more risk averse in that sort of environment. And so, this focus on next year, right, to bring higher wage increases, with companies following on from where Yanai from fast retailing started off this year with a 40% increase in base pay for the new graduates. So the irony is, as Oki points out, it's not very bazooka-esque, Kuroda, Abe. This was very sexy stuff. We're gonna break the system. We're gonna create something new. We're gonna do shock and awe. Kishida, the current administration, is not like that. But when you add it all up, it's really interesting. I mean, there's a lot of small little things, and the perfect storm as a result of that is actually starting to come into focus.
Yes, I mean, there are so many announcements that it feels like the latest one is that he's having a new form of the new form of capitalism.
Sure. But Bill, okay, let's do it very simple. And I'm not a fan of Mr. Kishida. It's well known, but it doesn't matter. I'm an analyst and an investor. I have to respect reality. And the reality is that here is a man who has been in power for just about 2 years. And he has 100% track record. 100% of the bills introduced in parliament were turned into law. That's better than the Communist Party in China.
There's a benchmark for you. Now, Oki, what do you? I mean, a question that's come in, Donna's question about this, the sacred cows of Japanese business practices. How is? I mean, corporate governance is one thing, but how corporate managements behave below the board level is clearly the vital question. How do you see that evolving at present, as you observe it as a long-term activist investor, but also in your own business? If we were to take a snapshot in now and in 5 years' time, in 10 years' time, would this be recognizable?
I think so. As you introduced me, I used to work for Goldman Sachs, and before that, I worked for Salomon Brothers. And so I've been seeing, and also, I'm now on the board of MasterCard in the States. Yeah. So I've been seeing the various, corporations, and I have to say, the difference between ages, like 65 years old Japanese versus 40 years old Japanese, whatever, difference between ages are way, way much bigger than difference between Americans or Brits or Japanese.
Really?
Okay. Yeah. So I mean, the 25 years old guy in Japan, in the States, in London, very similar way of thinking, and the similar kind of values they have. But that is very different from the values or thoughts of 45 or 50 years old, not only Japanese, but also Americans and, British and blah, blah, blah. So this generation thing, especially with this internet of the world, all kind of information and everything is shared real time through SNS and everything, the difference between in the same generation globally, of course, there are some special, special countries, but generally speaking, it's getting much closer. And as I said, with those, seniors with the Showa success experience gone, we just try, we just very naturally change things. If it's diversity, if it's the age seniority system, if it's capital efficiency, we just naturally tend to do, my generation and younger tend to do what the Americans or the British people do. So that is a big change, and you will see probably, as I said, and Jesper said too, this is not led by bazooka or Superman. But this change is very strong, steady. So in 3 years' time, you will see, Japan is really changed. Then, yes, 3 years ago, it started. But since it's so broad and gradual, it's not very visible. So that is some very uniqueness of this change happening in Japan this time.
No, I think that that's very plausible, and I tend to think that with diversity, that particularly is going to come through. That the flow of professional women into gradually more senior positions and thereby taking decisions is not something that's going to ever happen with a bazooka, but it's a very steady and remorseless process that I think will come through. What about, did COVID accelerate this process in terms of working practices and so forth, a bit of generational change, but also just the way of thinking about things, or is it too short? I mean, a two-year phenomenon of that nature maybe can't be the bazooka that really accelerates.
I think it actually had quite a big impact to Japanese way of doing businesses or life. People used to, as you know, I believe, used to wear suits and then very rigidly and then come to the office like 10 minutes before the start time. Everyone wear the same kind of clothes and blah, blah, blah. That's gone. Everybody uses Zoom, almost all companies now, using a kind of flex time. Flexible time, way of people working, and this the Zoom meeting becomes so usual, and then it's easier for younger guys to say no, it's not the case to old guys. So this COVID thing really changed, and as I said, the biggest thing is that those the guys, people with the big success of in Showa, they stopped coming to the office. That is that really made a big change in the Japanese corporates, I believe.
No, and you are a great example of, if you like, the late 1990s, early 2000s generation of startup. I mean, entrepreneurs really responding to like the new era and the post-bubble economy period, and of course fintech, financial innovation, in a spectacular way. How do you evaluate today's generation of startup, of entrepreneurs in Japan, which Jesper is also very involved with? We might ask him, but with you, what's your sense of that generation?
When I graduated from Tokyo University, people went to MOF, METI, Mitsubishi Bank, Fuji Bank, if you remember.
Yeah.
And Mitsubishi Corporation and those places, right? Now I forgot the exact number, but fairly large number, like 40% or something of Tokyo U graduates now goes to startups or the companies who are created like just like within like 10, 15 years before. Okay,
yeah.
So there's a huge shift of people or those human resources away from the bureaucracy or the large manufacturers or large financial institutions into kind of a new economy, including startups. It doesn't necessarily mean Japanese startups are doing fantastic, I have to say they're not doing great because of the lots of capital markets framework and such. They tend to get satisfied with too small IPO, and then they forgot to grow. They forget to try to grow. So there are still a lots of how do you say, innovation, something need to be done in the startup part of the capital markets. But as regards the human resource supply, it's night and day compared to like 20 years ago. There are lots more good human resource into startup side. So that is very promising.
Jesper, what's your observation?
No, I mean, look, again, it's all about human capital. There's always going to be the weird entrepreneurs, but now you actually have thoughtful people, more conservative people, whether they're from Keio University, whether they're from Waseda, whether they're from Tokyo University, who actually are not afraid, to try their luck. And the reason for that is very interesting, is that, it's always about managing your downside. I mean, if a startup succeeds, it's all very easy, but of course, 95% of them don't succeed. And, a fair percentage of them actually go bankrupt. And what the younger generation, the current university graduates have learned from talking to their peers, from talking to their graduate friends, right, is that actually anybody who went to a startup and that startup went belly up, within 1 week, they got a job at Mitsubishi Corporation or at Hitachi Corporation. So the irony is that, actually this shortage of skills, the shortage of labor, actually works in the favor, in the sense of that it limits the downside, for the younger generation here in Japan. That's very, very important.
Yeah, no, that absolutely must be important, and the stigma, therefore, also is not there. You tried something exciting, it didn't work. You now do something different, exciting.
Yep. And Oki, I wanted to come back, because you were very, very influential in sort of being the spark for the price to book above 1. Which is really, I think, it's amazing. It's the only stock exchange in the world that actually, looks for capital stewardship and for, so really, sort of, it's almost the TSE fulfilling its own fiduciary duty to the nation, right? So the question is, what's next? So price to book above 1, which is good. And I think, you and I did the calculation. If everybody goes above price to book, you're basically at 40,000, right, on the Nikkei. I mean, give or take, something like that. But, so now we've got price to book above 1, and, that shaming process is working its way through corporate boardrooms. So what other issues would you, Oki, like to see addressed by the Tokyo Stock Exchange?
Reacting to that, the price to book 1, a thing, there are companies who reacted to that. There are, and also many companies whose PBR is below 0, but didn't react. And if you look at those companies, the characteristics of those companies are, in many cases, with a large, how do you say in English, large controlling shareholder.
Cross-shareholding, yeah.
Cross-shareholding, or a particular kind of family or whatever, someone has got the controlling shares. Okay, then the companies do not, do not sense pressure as a threat, right? So I think, being as the publicly traded company, I think that we should limit at least the voting power of the controlling shareholder. It could continue to receive economical, benefit, of course, because it's it's a rights of the wealth. But as regards the voting rights, or I think we should have some sort of mechanism that if anyone has got, say, over 30% of, shares, any family or group has got more than 30% or 40% of shares, then the entire voting rights of that group will be limited down to 40, like in a pro rata basis. So that will bring a very strong kind of, how do you say, check governance or checking against those closely held shares or controlling shareholders. I think that may be, again, any exchange in the world wouldn't react to my proposal, but the TSE this time might. So that is the next step.
Right. Well, good luck with that. That sounds very important to do. Let me ask, both of you, a sort of background question, which is more for the foreign investors in some ways, but about the yen. Richard Thornley has put in a question. Could you both comment on the Ministry of Finance's recent, quite rare intervention in the markets to prevent the yen weakening further past 150 to the dollar? How do you see the yen and maybe also its relationship to the performance of the Tokyo stock market? But
yeah, this is maybe Jesper would be better place to answer, but I had been a trader, right? So from my point of view, if the central bank or the government, or if the central bank doesn't create volatility, then money will go to the higher yielding currency, period.
yes.
Okay, if the dollar is higher rates, yen is lower rates. It doesn't necessarily mean it can stop at 150, it can go 160 or 170, whatever. As long as there's no volatility, it's better to buy the higher yielding currency. But Kuroda, for example, he created volatility so that yen didn't get this weaker, because traders were kind of worried about what's going to happen next. With that kind of the governor, MOF could effectively do the intervention. Okay, but if Mr. Ueda continues to create almost no volatility, he is good in communicating with the market, but because of that, there's no volatility made. And if that continues, it's difficult for just MOF play the book, right? It has to come kind of together. So I think I'm a little bit worried about yen weakening. It could continue unless Mr. Ueda somehow change the way he handles the market or communicates with the market. He's doing too good, too smooth. That's what my kind of personal kind of view.
He'd probably accept that as a compliment, I imagine, in his early months as governor. And Jesper, higher for longer, is the Fed's position. Do you feel endure?
It's Oki and I were just in the United States, and for all intents and purposes, fine. We've had 9 months of real interest rates being positive. And, there are some signs that some of the interest rate sensitive sectors, are no longer accelerating. I think it's still difficult to sort of point to a roll down, in demand, unless you sort of change the scale in your slides, right? But so for all intents and purposes, the American economy, continues to be strong. There's a lot of discussion, and you may have seen Martin Wolf just wrote actually today in the Financial Times an excellent piece on the asymmetry of monetary policy. That, in other words, if you ease too early, you've got a real problem. In the sense of that inflation, like it is happening in the UK right now. You have this bounce back, coming through, and killing inflationary expectations is much more difficult, than a couple of data points will make it out to be. So what does that mean? Personally, if I had to trade and invest, there's no question. I think that a parabolic overshoot, right, towards the sort of 160, 165 level, is perfectly, it's perfectly rational to assume. I think that the currency will change fundamentally, right? Only if and when Mr. Powell actually starts to cut interest rates, and they will do so. I mean, the nice thing about Mr. Ueda is a great communicator, but he's kind of dull in the sense of what he communicates because it's always the same. The Federal Reserve will have zero problems in changing. I mean, if you get 3 or 4 months of increases in the unemployment rate in the United States, the Federal Reserve will turn.
Yes.
And with that, the dollar will turn. So, when is that going to be? Typically, it tends to be, a couple of months before the election. So maybe next summer.
maybe exactly. Now, another question I should bring in before, to make sure before we close. The first question that came in fact, wanted the speaker's view on the aging population and the effect on the economy and the labor market. Now, this is a gentleman from Brown Brothers Harriman, in fact. Now, you've talked, Oki, about the generation change in a positive sense about the young. Clearly, the other part of it is the aging of the society, the effect on the labor market, and to some degree the stimulus for immigration. Do you want to make just some comments in response to that about this question of, as it were, the weight of an aging society and dealing with it, policy to deal with
it? I'm just a capital market guy, so it's way beyond my kind of how do you say, capacity. But I think the aging society actually in a unique way helped Japan to innovate itself, using AI, robots, and that stuff. Japan, compared to other countries, our familiarity to robots or AI are much bigger.
Yes.
Because of manga and many things, the robots, AI are our friends. Okay. In the States, for example, they are Terminators or Robocop, pew, pew. Okay. But it's a different in Japan. So I think, this the chat GPT and, AGI or GAI eventually, Japan probably would be the fastest adopter of those technologies. I think that should help. But I think in the long run, the losing population doesn't help, because at the end of the day, I mean, AI doesn't eat, right?
No.
We eat, and so we need human being bodies, right? So I don't know. I think that maybe we should create the Panasonic or those companies are very good in creating pot, like a jar, to make a good rice and that stuff. Maybe they can create a kind of machine whereby we put the embryo, and then in like 8 months time it will produce the baby.
That's an innovative idea.
We in Japan, we don't have Christianity is not really the big thing in Japan. So maybe, and also technology wise, we good in keeping the temperature in the same way to create a good miso or good those fermented things. So maybe we can make that kind of technological innovation to help Japan. But I don't know. This is not my specialty.
Now, in more near-term things, immigration, Jesper, creeping up.
No, I mean, first of all, I think that, look, I mean, Oki is alluding to something that's very close to my heart. I think that the demographics is, a catalyst for a lot of the inefficiencies, or to change a lot of the inefficiencies that have built up, in Japan. And the adaptability of technology, it's natural to the Japanese, right? And so from that perspective, I very much agree with that. The other point, of course, is that, look, whether you like it or not, Japan did get rich before it became old. And I mean, just look at, the reality is that, for example, real estate in Tokyo is now the average mansion. I'm not talking about the luxury thing, right? The average mansion, where the average Mr. and Mrs. Watanabe has their asset, is now trading above the bubble peak. So in other words, you do actually have positive wealth, right? And that, of course, is very important as a retirement cushion, for the baby boom generation coming through. So, being rich and having seen over the last 8 years, really, substantial increases, in real estate values, in residential property values, I think, actually helps. So the business I want to start with you, Oki, is we should start the reverse mortgage business, right? This would be a good business. Now, the other thing is, it's very, very clear, with this new focus on onshoring, friendshoring, new capital formation, new factories being built in Japan, you run into labor shortages very quickly, very, very quickly. And so the semiconductor factory that Sony and TSMC are building in Kumamoto, they've already hired more than 1,000 non-Japanese, to actually help out with the construction. And in terms of actually manning, the factory, who are going to be the top engineers there, again, the non-Japanese portion is going to be very, very substantial, which is something that Sony and TSMC, in terms of their corporate DNA, can actually manage. The question is that, unfortunately, outside of the sort of globally very active 50, 60 companies that Japan has, the other Fortune 500 companies, their management style and their integration of non-Japanese expertise into positions of seniority, providing a real career path rather than just solving a bottleneck problem, right? That, I think, is going to be a huge and very interesting managerial challenge, and is going to stir up the corporate metabolism and contribute to the change in corporate culture going on. And one example, Bill, this was my discovery of last week. I was so proud. I'm so glad I'm a Japan optimist, because, 7-Eleven, the convenience store company, on April this year, they sold their first franchise to a non-Japanese. And that non-Japanese is a woman from Nepal who came to Japan 11 years ago on a Mombusho, on a Ministry of Education scholarship. She worked arbaito at the 7&I, and now she's the boss. She owns the shop. And it is really interesting. I then went to visit 7&I, and they've got this whole strategy. Already 11% of their staff at 11 convenience store is non-Japanese. And their projection, just given demographics, is that by 2030, it will be 50%. Wow. So they have set out a corporate strategy to provide the entire ecosystem. They're providing help with the visa. They're providing help with the language schools. They're providing help with accounting teaching. They're providing help with, DX training. And they've got this wonderful slogan, which is that the conveni is the gateway to Japan. But the point is, you will not find a single politician who will stand up and say Japan is going to be a net immigrant superpower, right? This is just not going to happen because it's the old people who vote. But at the corporate level, at the real level, right, the corporate strategies are starting to come into place. And one final fact for the day, I've checked the numbers. From January to June, immigration into Japan is running in excess of 200,000 people. Now, there's about 2.3 million foreigners living in Japan. If you have a run rate, of 200,000, that's extremely significant, right? So I think that the reality is, that with the onshoring, with the investment, also this investment in human capital, including non-Japanese, I think Japan will surprise the world.
Well, that's a great note on which to end this this discussion. That's very, very striking. I must try to find that outlet of 11 I do think the Konbini is in a way the gateway to Japan. I think this is not a bad slogan. But in any case, let me thank very warmly Oki Matsumoto for joining us. It's been a great conversation. Thank you very much for taking part. Thank you, as always, Jesper Koll. I will be coming to Tokyo at the end of this week for a conference where both Jesper and I are appearing, so I'm looking forward to seeing him there. But meanwhile, let me thank all the audience for taking part, for your excellent questions, and we'll see you again in 3 months' time. Thank you all, and thank you to the Asia Society for your collaboration with this event. Bye.
Thank you. Sayonara.
Sayonara.